Yeah, we're just getting the top and bottom lines right now. Numbers. We are getting EPS of 81 cents per share. That is higher than the 75 cents estimates on revenues of 35.08 or $35.1 billion, which is also higher. And I'm going to come back with more of the data center numbers and guidance in just a moment.
All right.
Back over to you guys.
Yeah, thank you, Christina. Paul, I'll let you finish.
Yeah, so I think, in the call, hopefully there'll be more clarity on looking ahead to next year. What's the Blackwell production going to be? We know demand is there. Whatever they can make, they'll will be bought. But it's a matter of production and how much they can get out the door. So that's more of a longer term. But for the short term, it's the revenues, and I think it was just slight of a $2 billion beat. So that that's. For what the stock has reported relative to expectations, that's not really that impressive compared to what they've done.
Yeah, and I know you said you were looking for a beat on the guide as well, and we're going to get that info from Christina Partsinevelos hopefully momentarily, but I got a sense from looking at it that this guide on the revenue side, on the top line, might not be quite as strong as some were hoping for. Patrick Moorhead filling in here. The data center revenue came in pretty darn strong here. Data center revenue, $30.8 billion. You mentioned that's really most of what you're concerned about here, right?
It is. It's the number that matters for investors, and it's where their stratospheric growth is coming from. And like I said, they came in and they beat, but narrower than they typically did. And now everything rides on this guide. And if there's any challenges with the guide, then there needs to be some explanation on the H series to the Blackwell series, and the market will react. I agree completely with the speakers talking about if they didn't beat by a mile, then the stock's going to go down, right? And that we saw very similar characteristics. There was a little bit of spooking on the Blackwell silicon issue, but once the market chewed through that and got through the call, everything went up and to the right.
To you, what do you make of the comments about being supply constrained, not just in Blackwell but also in Hopper?
Yeah, I think that the Vegas line here was probably 38, 39. They missed slightly, but that supply constraint comment, that probably means they probably could have done 40 or maybe even more. We don't know what the supply constraint is of late, whether it's memory or still CoWoS. My guess is memory as they move from H100 to H200. But I think clearly NVIDIA could have shipped more here had they had all the components.
In terms of how we're supposed to dissect that supply constrained comment, part of it is understanding what was going on with Blackwell and whether or not there was a shift to Hopper in the light of a supply constraint, situation for the Blackwell chip. Have we gotten any commentary about the overheating issue? Is that part of it?
I don't think that that's part of it at this point. They talked about a successful new mask set helping yields for that product. So I'm not sure it's that chip. I think it could be an additional component like memory. It also could be these racks that are incredibly complex. We don't know about transceiver availability. We don't know about all the other thousands of components that are going into these racks. If any one is constrained, it could constrain shipments overall.
Chris, I'm going to tweak a little math here just to make it easy. So they're going to do about $190 billion of revenue next year. That's sitting on top of a company that's basically trading, $3.6 trillion market cap. Their earnings are great, but they're out earning their revenue. My point is, when does that catch up? Because either they're going to grow into that price to sales, which I'm hard pressed to believe they can, or something's got to give probably on the margin front or the earnings front. Thoughts on that?
Yeah, I think first of all we'll shake out north of 200 for next year. Secondly, you have to look at gross margin for this company in the mid 70s. It's truly incredible. When you look at, let's say, EV to rev, it really doesn't get more profitable than Nvidia.
Yeah, I mean, thanks for having me. So as far as the quarter was concerned, I mean, looked great. I mean, I think we were looking at 33 billion going into the print. So, I think the company guided, a couple of months ago at 32.5 billion. So, the numbers were incrementally going up kind of into the print here. And then they kind of posted a number that was, about 2 billion or so above what the expectations was. Clearly the guidance I would say is it was above what we expected. We were looking for 37 billion, but you've kind of got this game now where you kind of have to beat the street by at least 1.5 billion to 2 billion. You didn't get that as far as the guidance is concerned. I personally would not be worried about that. What we've told investors out there is we expected Nvidia to kind of be a little bit more on the conservative side of things as far as the guidance was concerned for the January quarter, just because this Blackwell launch is kind of the shift towards this platform-based offering, and listen, it's a very complex chip to make, and I think you have to kind of err on the side of caution here if you are kind of that management team, and if you over deliver in come February. So I think this is the right move in terms of the guidance. I don't think you should read too much into it. I think all in all, this is these are pretty good, strong results.
And Angelo, the CFO commentary came out as well, and they say in there both Hopper and Blackwell systems have certain supply constraints that we know, and demand for Blackwell expected to exceed supply for several quarters in fiscal 2026. So does that sort of match what the market has been expecting? How do it sounds like you think that NVIDIA's sort of managed expectations pretty well.
Yeah, I mean, listen, we had actually written, I think, in our preview on Monday that we expected Blackwell delays to persist through the end of calendar 2025. So that kind of goes in line with, I think, the commentary that Jensen had made. He had made, comments just several weeks ago about kind of the insane demand that they're seeing for Blackwell. So we know this, we know the demand is strong. We know the demand is there. We know the revenue is going to be there. So again, it's one of those things as far as the guidance for this quarter is concerned, probably has more to do with some of the supply constraints and them kind of being a little bit cautious on the launch side of things. But yeah, I mean, as we kind of start seeing this ramp in the April and July quarters, and we believe a nice step up in terms of the revenue trajectory there, given that this is again kind of this platform-based offering out there, these rack solutions, then you're going to see kind of significant improvement in fundamentals. But yeah, that the supply constraints will persist. It'll probably hinder them from kind of selling what they want to sell, let's say over the next 6 to 9 months. But still, I think it also provides some very good visibility out there for investors looking out over the next 12 plus months.
And taking a look at some of the line item beats, I mean, obviously all eyes was on data center, Chris, but automotive was one of the biggest beats. And I'm wondering, just in terms of, trying to extrapolate that trade, was that Tesla, basically?
That was definite. Well, I think auto is really more about the vehicle itself as opposed to in Tesla's data center. And Tesla does their own AI. I think this is somebody else. Maybe it's an early ramp with Mercedes, for example. But Colette did talk about self-driving as the huge motivator there, as opposed to infotainment or consoles. So they are moving to the AI portion of their auto story.
Chris, thanks for being on. Another question about sorry, I just lost my train of thought for a second. The competition, who do you think how far actually in front do you think away are we from real competition? How long are you going to have this market to themselves?
Well, Amazon sounds like they're ramping supply. AMD had a hot start. They're still going to have growth year over year, but that seems to, at least that really high-end 12 billion kind of number for next year seems to have faded. So it's a mixed picture out there. I would say that this pie is growing very quickly for all, and that I think NVIDIA can still grow even with guys like Amazon, guys like Microsoft doing more themselves. They can still grow meaningfully even into this diversification.
Going back to the September timeframe, we started to change our tech narrative a little bit, and we suggested that in here, Martin, NVIDIA becomes, quote, just another stock. Now, what do I mean by that? What I mean is that over the past 18 months, the beat and raise dynamic that's come with NVIDIA has been phenomenal, right? And what it's supported is this massive outperformance versus the rest of the index in most parts of tech. What we've been seeing, though, is a deceleration in the step function of where those forward expectations are going. This quarter is more or less in line with that. And what that means, again, just to emphasize, at a 6% plus weight within the S&P 500, this is mission critical stock to the ultimate S&P 500 performance. But as you see this decelerating rate of upside surprise, you have to allow for the stock to be a bit more transitory from a trading perspective. So what you've described in terms of the commentary thus far, what this does is reinforce conviction in the longer term. Let's call it 1 to 2 year growth projection. I think right now consensus expectations for next year growth for NVIDIA are right around 40%. That's pretty heady. That's relative to the rest of the Mag 7, which are projected to grow 20%. And that's relative to the other 493 within the S&P that are still struggling to find earnings growth expectation bottom for next year. So all told, we're comfortable. The underlying growth trajectory is in place. And ultimately what that means with NVIDIA, it actually has a little bit of a safe haven dynamic to it because of the visibility of fundamentals relative to the rest